Welcome back to my YouTube channel, FlareFX, where we make trading simple. So before I get started with everything else, please make sure you do subscribe. Please make sure you do comment. If you want more content breakdowns like this, please make sure you comment down the pair you want me to break down as much as it is. I've heard more feedback about more people wanting breakdowns with more pairs. I offer a mentorship program where I do teach people that, and I offer them more trade breakdowns in depth. You get to send me analysis, and I analyze it, and I tell you what I see, how you can fix where you have to fix, and then we work together as much as it is. It's good to have someone who's there to hold you accountable as much as it is. But before anything else, let me just get into this breakdown and just make sure you watch till the end. Now, GU has been moving really nicely for the past few weeks. Actually, it has been consolidating for a while, but as the year comes to an end, it's been moving really nice, really bearish. There's so many opportunities that you can catch, so I'll just go over price action like I do usually. Start from the higher time frame, and then we just go over to the lower time frame. If you still don't understand, please just comment what the situation is so I can help you as much as it is, but I'll do my best to be as clear, concise, to help you understand what I do and how I do it. Okay, let's get started. So obviously with me, I like to identify my market structure before I even put any market structure mapping, you get what I mean? So it's always trying to understand where the highs are, where the lows are, where the liquidity is, if liquidity has been left, if there's any fair value gaps, you understand. So obviously you have to mark out the highs and the lows. So understanding what the overall trend is before you take the trade, because this is another tip I could give for especially beginner traders. It's like, if what is this? The market direction, if you can get it correctly, your entry does not need to be perfect. You could literally get the worst entry, but if it's in towards the direction where the market is flowing, you will get some profits, much as it is. So execution is something that you can build over a long period of time. A technical skill is something that can be built. So it's just mainly focusing on getting the right direction, dancing with the market instead of going against it, you get what I mean? So obviously start off by marking the highs and the lows. So I don't want to go too far away from price, trying to focus on current price structure as much as it is, because that's where we kill GBPUSD, because the intraday moves are very beautiful. You could swing it, you could definitely swing this pair. Most of my strategy is built for traders who aren't really good in the psychological realm. Like, a lot of my clients aren't really good in terms of psychology and holding their trades. So I'm gonna do my best to make trades or give breakdowns where you could literally hold the trade for like close to 4 hours. 4 hours is a relatively decent amount of time. If you work a 9 to 5, it becomes easier. Okay, so we label out the structure. This was a high, 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 right? This is a low, this is a low, this is a low, right? This is a low. So you take this thing, does it make sense? First, before you carry on, does the things that you're labeling make sense, right? It came down, it came up here, it came down, it broke structure, makes sense. Came up, was a pullback, came down, came up, broke structure, created this types of liquidity. I'll even use a pencil just for, or this, yeah. This came down here, came up here, came down here, came down all the way here, came all the way in here, tapped there, tapped here, go up, come here, simple. So now you understand that the price is moving a bit weirdly, but overall this is a bearish trend, right? So we can remove all of this stuff so we can look into price action way more deeply, right? So I would like to focus on what we see here currently. We know we're in a downtrend, so we should be looking for more of sells more than anything from buys. Yes, you can counter trend trade, most definitely, most possible. If you have the skill, why not? You know, everybody trades differently, but obviously let's just start from the labeling out just to be clean as we possibly can, clean as we possibly can. All right, so obviously we could probably mark this out as a break of structure over here. This is a break of structure. It made that high, it came back, it made this low, it came back up. So what I'm interested in is how price reacted to this zone here. So, and this, we could even classify this as a high. Perfection. So like, as much as it is, so let's start by analyzing what price action has done before we even get to anywhere, right? It came back all the way from this high, came down over here, broke multiple lows. These are multiple lows that have been broken. This is a strong low. Price came back up to this point. It never broke this high, so we can classify this as high low. It respected this order block, I assume, yes, perfection. It respected this order block, came down over here, created this low. So this low never necessarily broke this one. We could probably highlight this like that. I wouldn't necessarily classify this as a break, more so a wake liquidity grab as much as it is. So they pushed to get the liquidity here, right? So I wouldn't classify this as a break, hence why I didn't put any like swing structure point maps, you get what I mean? Because I still feel like it's just lows that were created just to purge the liquidity and take price where it needs to go, right? Okay, cool. The nice thing about this one, if it's a trade that I would have taken if I was on the chart and trading this pair as often as I would like to, but I'm really good at GU, so I'll explain. But for now, a lot of people have been suggesting this one. Please comment what pair you want to see. This, I would classify this as a purge of liquidity. A purge of liquidity, price came down all the way here, formed this order block, completely went down, right? And multiple lows were broken here. We could even classify this as liquidity too, if you could mark out all of this. Hence why price moved so impulsively down, you know? Okay, cool, that's fine. It came back down over here, created this low. Then it tapped into this order block over here that it had created, came back down again, came back up again, tapped in again, and flew all the way down, right? So obviously now, the way GU likes to move, it's basically copy and paste of whatever it likes to do, right? As you can clearly see what happened here. Let's even leave this price action to show you how price likes to repeat itself, right? What did price do here? Price came, it created an order block and possibly moved down, came back, mitigated this order block, right? And it continued to come back down and come what again to the order block and do the same thing. So now the thing that you see here is basically what's happening here. What happened? Price purge liquidity over here. We'll do this purge liquidity over here. We'll even move this thing. We already know this was this order block has been mitigated. Keep that in mind. So price has already what is this? Purge the liquidity over here. The same way it purged liquidity over here. If you could go on the lower time frames, this is a purge of liquidity too. That is a purge of liquidity, right? Perfection. It purged liquidity. This is an order block it created. It hasn't mitigated this order block, right? We could highlight that, right? So you could even put this as liquidity that's resting over here that we could come back to, right? So now, obviously, right, when we look at the charts like this, this is only on the 4 hour, remember, right? So we're getting the higher time frame direction. If you can get it right, then you know where you're going, right? So we understand that automatically we're trading between these two ranges. These two ranges. Can you see what I'm saying? So automatically a lot of people could see this and be like, oh, price moved impulsively, broke structure, we could probably use this as an order block. But that's where they catch you wrong, because it likes to repeat itself. Print the order block, come back down, tap into it, fall back down, come back into it, and tap into the higher time frame one, right? Same situation here. Come back, tap into this one, fall back in, tap into the higher one, break structure. That's how it usually moves. Like with the way the market moves, there needs to be traps, liquidity taken, so price can move to the places it needs to move to. You get what I mean? So as much as it is, I trade on 4 hour, 1 hour, 15 minute, 5 minutes. I broke down in the last video what I use my specific time frames for. For time being right now, please just check out the last video if you want to understand what different time frames and how they help with your analysis, right? So now we understand where we're trying to go in terms of the way the market has been moving for the past week and a half, right? So we come to the 1 hour time frame. This is a time frame where you look for entries now, where you look for places you want to execute, if there are places to execute. You get what I mean? So price has been moving really bearish, very bearish. So you could look at this and be like, okay, cool. How can I execute, right? You know that once price breaks structure, it has to come back to where it initially happened, right? So this is where the Fibonacci's come in. You use them as confluences. You test that. Basically, sometimes the Fibonacci can work, sometimes the Fibonacci works. You get what I mean? So you just have to try and do your best to understand what is happening, right? So you take the Fibonacci, prices came in all the way into here. We highlight this, right? So automatically this thing has highlighted this order block, right? We could probably remove the one that we saw from the higher time frame, because the perspective changes, especially as you get lower and lower into the time frames. You understand, oh my bad, you understand what the market is trying to show you, and you have to read the signs as much as it is, right? Okay, cool. Price has done what it done. So over here, you can already see that price has already mitigated this order block over here. So we can remove this purge of liquidity that we saw on the 4 hour time frame. Let me go on the 4 hour time frame so we understand it and see it differently now, right? So where price has mitigated this order block, there was liquidity over here. It purged it, it tapped in, it flew down, right? Price has came back to this point. this is the mitigation of a fair value gap. I guess we could call it a fair value gap. It came in, it tapped in, it fell all the way down, right? Okay, cool. We go on the lower time frame once again, so we understand what's happening, you know. So automatically now we're looking at a very good zone to execute because of the way prices moved, right? For me, there's so many confluences that I can already see without even labeling anything, right? So number one, the rules that I mentioned, like I said in the previous video, I mentioned what are my POIs that I like to use. So I might just go once again. It's part of the trading plan. Number one, there's a purge of liquidity. We mark it out. Purge of liquidity represents an X, right? Which means money has been taken. Number two, there's a break of structure. Structure has been broken, right? Number two, reason number two, clean cut finish. Reason number two, the price has been broken. Reason number three, prices moved away impulsively, showing there is what? Smart money or what? Banks involved. You want to trade with the big ballers. Because we're retail trades, we cannot move price. That's one thing for sure we cannot do, right? So automatically you understand that we're planning on taking price all the way down here. We're anticipating. You don't know what the market is going to do. Number one, don't fall in love with the one direction of a bias, because there's two ways. A market is very, 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 very subjective. Everybody trades differently. So don't fall in love with just being like, oh, I see sales. You work with probabilities. The probabilities are stacking up for sales right now. It doesn't mean that it won't buy. So you just try to look at the market in different perspectives as you're like analyzing the same way I am, right? So we go on to the lower time frame, we go on to the 15 minute. 15 minute is the location where I like to execute, right? So already you can see this is a mitigation point where prices came in. For people who are supply and demand traders, this was a good, very, very good zone that you could have executed in as well. Very beautiful setup if you had taken it. So now, and look at another more and more confidence. This was a liquidity resting over here. I think this was during NFP, hopefully. I'll just mark it out, right? We have market sessions. So this was New York session. New York open came up. Once New York came up, it broke the high of Tokyo session, mitigated a order block over here. Guess we could highlight that one, but it came into this zone, the supply zone. That's why I like supply zones as much as it is. Like, they allow you and they allow the stop loss to kind of breathe, especially when you're trading these types of pairs. So as you can clearly see, it moved down impulsively on Friday. This was NFP time. So as you really can see, that was the initial movement that caused that break of structure and created that order block, showing the banks involved, right? So we can remove this market sessions. Let me just clean out the charts so it's a bit easier and more frequent to understand. So like this, right? So automatically, you know, all right, price has broken structure, price has purged liquidity. Where are you looking to execute, right? So there are different ways you could mark out your POIs. I know in the last video, I showed you how I could. So I'm going to try and demonstrate different ways you could mark them out depending on what type of trader you are. Are you an aggressive trader? Are you a conservative trader? You get what I mean? Depending on your type of skill set, right? So obviously, I think we could even go to the lower time frame because we understand the higher time frame price. Once you understand the higher time frame price, going to the 5 minutes and actually analyzing is not a bad thing because you understand where the market is trying to go, right? Automatically, from what I see right now, right? Break of structure, impulsive move down. I'm anticipating price to move all the way up to this point again into this zone where it was a bit tricky, right? So now, obviously, what I would highlight is this whole movement over here, right? Because why am I saying this movement, right? If we go on the lower time frames again, the same conferences that we got on the high time frame is the same conferences we use on the lower time frames. Perfection, clean cut finish, purge of liquidity over here, purge of liquidity over here, break of structure over here, break of structure over here. Let me just see something really quickly. Perfection. You could actually probably even execute on this fair value gap over here. This thing doesn't want to highlight. Right over here. This is the most intricate entry you could possibly get with the high time frame bias, right? So we probably execute off of this fair value gap. I'll highlight this and then we say fair value gap like that. So yes, this is an imbalance that price has left after it has purged liquidity, broke structure, broke second structure. So now there's more and more and more confidence. Why? Look at this beauty. Literally on the resistance as well. If we could move price all the way back, there's probably more places where it rejects off, but we're not trying to do that all the way like that. But I'm just trying to show you that automatically they're stacking confluences. Right now we'll go over the higher time frame, and then afterwards we'll understand how the thing is as I break down this pair. But for now, right, we understand that we're going to be using this fair value gap as an entry point. This is where we're interested in taking price, right? This is an internal break of structure. This one over here, we'll just remove it. So now with all the trades that I do, we run it backwards using confluences from the 15-minute, 1 hour, 4 hour, and then afterwards it gives you confidence to take the trade, right? We'll start all over from the 15 minutes and their confluences. 15 minutes, we saw that there's a purge of liquidity. We saw that price moved away impulsively, right? First reason that's a confluence in the lower time frames is that there's a purge of liquidity. It moved lower and then it broke structure. That's 3 reasons already. It broke the 15-minute structure. That's another confluence. So there's 4 confluences on the what? On the 4-hour time frame. The 5th confluence is that we're executing on a fair value gap, which is on a resistant point, as you can clearly see, right? Clean cut finish. That's the 15-minute confluences. Now we go that's a 5-minute, my bad. Now we go to the 15-minute confluences. 15-minute confluence, purge of liquidity over here. It has mitigated another order block on top, showing that there is a supply chain of bearish movement on the way to the lower time frame, right? Clean cut finish. It also broke structure and it also moved impulsively, right? And we're also executing on where? The fair value gap that we saw on the 5-minute, right? Clean cut finish. Those are 3 reasons that we have understood. Now we go on to the 1-hour time frame. Once again, can you see what I'm doing? Stacking confluence, stacking confluences, right? Automatically, the 15-minute and the 1 hour also make they're in correlation, and they both make sense in terms of the way that we execute. But as much as it is, you can clearly see how price has been moving. And another confluence that you can see is that it broke structure over here on the 1-hour time frame too. So showing that there's some people like banks who have money that have been influenced in these positions, right? So now we go on the 4-hour time frame as well. Now, already we understand we have mitigated this 4-hour zone before. And this 4-hour zone did what? It purged liquidity. What? It also came back all the way down and formed another supply chain, forcing the price to go down, right? Another confluence is that, look, there's a higher high, there's a lower low. Price came over here and freaked to break this higher high. So automatically, we already know we are in a downtrend. Can you see how using that 5-minute time frame as a confluence makes you understand that even if you chill on the 1-hour time frame or on the 15-minute time frame, on the 1-minute time frame, you understand that like there's so much confluence backing you being in those time frames rather than just going there and trading recklessly without knowing the market direction, right? So we can go on the 15-minute time frame. Now, there's 2 ways of highlighting this. Some people are not comfortable just using this because they feel like, oh, what if price comes? Fear of missing out, basically, you know. So I'm trying to help everybody feel a certain type of way. We can go on the 5-minute as well. A lot of people, there's different ways you could possibly do this. You could probably highlight this whole range over here, right? Anything works for anybody. You get what I mean? Really depends. You could highlight this order block over here, depending on how you feel as a trader. Or some people can highlight the order block and the fair value gap as well. You get what I mean? So immediately once you've done that, right, you come. This is where you're planning on selling this pair. You put the stop loss over here. That's relatively around 20 pips. You're targeting this. Why am I targeting this? I'm gonna get to it later on the thing in the video, right? So yes, this is where we're targeting. Simple clean cut finish. What I like to do as well, it's not necessary, but it's something that I do, especially with you, because it's very volatile as much as it is. So you take the Fibonacci, and is it like this? Yeah, you put it over here. Usually you could put your stop loss over here for, I think it's a 37, 36, or if that's more conservative for people who want to trade long-term trades, someone who's not comfortable with holding trades too long, or like they might feel like they might get stopped out, especially if there's news events. I feel like if there's news events, using this way of letting your stop loss to at least breathe a bit so you don't get stopped out as much as it is, right? That's not something that used to happen in the beginning for me in my trading journey. So I'd probably put it on this high over here. It's very conservative. It's not aggressive. You can let price breathe. And then, so here's another confluences that I'd like to see as price approaches my area of POI or area of interest, right? So if price comes back up over here and creates some sort of liquidity just chilling over this point. I wouldn't mind taking this trade because automatically you can, let me just put this over here like this, and then some sort of liquidity resting over here like that. That's a good entry model. I think it's clean cut finish. And then yeah, so you put it like that. This is how I would execute this pair as much as it is. Looking how it's moving, right? Automatically, you see this, the supply chain. We executed over here. It broke structure. We executed over here. It broke structure. It came back down over here. You get what I mean? So those are the types of things I would like to see, especially as prices moving towards my entry. For people who are more visual seers, maybe I could even do something like this and then take this too. Like that. This is what I would like to see, especially leading up to this point over here. Something similar to this. We could probably make this smaller like that. So there's some liquidity resting over here like that, and then we come over to the lower time frame. Clean cut finish. This is how I would like to see price moving up to, and then afterwards, obviously, where you would take partials or profit, right? Let me just help the people who don't understand, especially when you're in a trade. So now we've analyzed where we're gonna execute, right? Now here's the important thing too. A lot of us, especially when we're in trades, we don't know where to take profit or where to necessarily close, because a lot of the time our psychology is a bit it's in development as much as it is. So automatically, you know, right, there is liquidity resting over this at this point. Why? Because they're relatively equal lows. The same way you look for reasons to execute a trade is the same way you look for reasons to exit one. You get what I mean? It's the same thing. So here's the liquidity that has been resting over here. We know that price can come back and mitigate this point, right? So if you're not someone who's really comfortable with taking the trade from the swing points to the next swing point, then automatically putting your stop loss right where the liquidity is. You already know that the liquidity is what banks want already. So just allowing the trade to play out, right? And also remember, these risk to reward ratios, right? So you could tell yourself, okay, once price gets to 3% over here, this is where you could be looking to lock in profits or even break even, you know what I mean, and riding it all the way down to where the liquidity is resting. And that's all I see for GU, man. Really appreciate if you watch till the end of this video. There's a special offer for you, especially in the next one. Stay tuned. Please subscribe if you do enjoy this content. Please repost on Instagram, comment, DM me. Like, as much as it is, this is a community, and the more you guys give me feedback is the more I know what type of trades you guys want, the more of content you guys want me to produce. You get what I mean? So if you do enjoy, please subscribe, please comment, please share. Until the next one, FlareFX signing out.